Welcome, everybody. Thank you for joining today. We're going to talk about down payment assistance business done right and give you a lot of tips and tricks and insights and data that we've been hearing from around the industry and in our work with lenders to become more efficient and close more loans involving down payment assistance, but in general as well. So this is really for you banks and lenders out there. I've got a couple of speakers today. Myself, I am Sean Moss, and I oversee operations and customer support for Down Payment Resource. That includes a team of people that track and monitor all of the homebuyer programs around the country. And I get involved heavily with lenders in onboarding DPAs, our solutions, and sort of executing on the affordable lending or CRA or DPA strategy. And Joe, if you want to introduce yourself, Joe's going to cover the second half today.
Certainly. I'm Joe Whitaker. I'm Director of Sales here at Down Payment Resource. I work with the lender segment, and I look forward to working with you guys in the near future.
All right, so I'm going to kick us off here and talk through some sort of background information, and then Joe's going to talk about ramping up your affordable lending strategy. But let's start with a background about Down Payment Resource. We are essentially a database of all of the 2,500 or so home ownership programs around the country. And we are trying to help you guys bring home ownership to renters and new buyers for whom the idea of home ownership may feel out of reach or based on misperceptions that a lot of those younger first-time home buyers, millennials, may have about financing and down payment requirements. Our goal here is to help you guys become and be the down payment hero for home buyers, prospective borrowers, and renters. And we work with a lot of industry partners to help you guys empower more of those buyers to enter the pipeline, close on their home, and become long-term successful home owners. So we want to start out here with an agenda and then a couple of polls. Here's a couple things we're going to cover today. What are the most common obstacles for lenders when it comes to CRA strategy, working with down payment assistance programs, working with first-time home buyers? But more importantly, what are the market opportunities with down payment assistance programs? What opportunities present themselves as we dig deeper into the data, the trends that we're seeing, and where we feel like the market is headed? Also, why are we declining most of the loans that get declined? We have some very interesting and compelling data to help uncover yet more opportunities with first-time home buyers, low to moderate income business, CRA eligible transactions, and so forth. So we want to share that with you. And then talk about some other factors that can help improve your pull-through rate. And then Joe's going to wrap it up today with some very specific solutions to help make down payment assistance business more effective and more profitable for you and your team. Now, to kick us off here, we also have with us in the background Tracy Shell. She's our VP of Marketing and Communications. And Tracy's going to launch a couple of polls here so we can kind of get a feel for our audience. You'll be able to click your answers right on the screen. And the first poll is, what is your role? What is your job description, or what do you do on behalf of your company? So Tracy, if you can launch that poll, and everybody can click their answer right there on the screen. Just single select, but click the radio button. And we'll give you a couple seconds here to do that. We want to keep this very interactive. So Joe and I are going to exchange a lot of dialogue, and we'll have a few polls here mixed in. So we can all kind of get a feel for the audience, the opportunity, and what lies ahead for all of us. So about 3/4 of you have voted. I'll give you a couple more seconds here. Tell us, are you a sales manager, loan officer? Are you in the corporate office with, for example, product, capital markets, secondary? Are you in operations? Or we do have some real estate professionals listening in as well. All right, so it looks like just about everybody has voted. Tracy, let's share the results on the screen and see who we've got today. Pretty diverse mix here. So the reason we ask this question is one, so that you know that everything you're gonna hear and see, the ideas and solutions we're gonna talk about, they're for all of you. But we also want to make sure that as we go, you're thinking about what is the impact of this data or these ideas given your role within the organization. What can you do, or how can you uncover more opportunities to help the company grow their pipeline, capture more and close more of their pipeline? And how can you strategize around building the top end of the funnel, bringing more renters, more prospective buyers into home ownership? Now, real quick, let's ask another poll. Tell us about your biggest challenge with DPAs. So especially for you, for those of you in corporate, or if you're in sales or sales management, what is the hardest part for you about working with down payment assistance programs? Now, there may be more than one answer here. Really, you can only click one on the screen, I think. But given your experience with down payment assistance programs and your role in working with those programs, whether it's reviewing and approving, applying credit risk policy, originating, marketing these to consumers, dealing with referral partners, what's the one thing that sticks out as the biggest obstacle or the biggest bottleneck in terms of successfully closing down payment assistance programs all the way through the pipeline, from finding and reviewing, whether that demand comes from a loan officer or a realtor, or is it tracking changes among programs, originating them profitably? If you're a depository bank, is CRA performance the biggest issue? Or maybe it's salvaging some of those loans that are falling out through the decline loan pipeline. And it looks like most of you voted. I'll give you a couple more seconds here. Just click your answer on the screen. Tell us, what is your single biggest challenge with down payment assistance programs? All right, so Tracy, I think we're at critical mass here. Let's share the results on the screen. And we're going to speak directly to this and a lot of these issues as we go today. But we've got a majority case here, and we're not surprised by that. We mentioned earlier, we track and monitor over 2,500 down payment assistance programs around the country. So especially if or as your geographic coverage area or your licensed states expands, it can be extremely difficult to find out what's even out there. So every state has a state housing finance agency, but what about the cities, the counties, the nonprofits, the housing authorities, the land trusts, and so on and so forth? And of course, we track and monitor program change, so we can speak directly to that issue as well. We feel your pain, and we want to talk about solutions today that lead to being able to originate these programs. I won't say seamlessly, but profitably and more easily. And we'll talk as well about salvaging some of those decline loans. So let's get started, Tracy. If we can get that off the screen, thank you, ma'am. And let's get into what we hear from lenders. And Joe, I'm going to defer to you a little bit here too. Joe's always out talking to lenders, kind of on up front, trying to figure out what the strategy is, trying to identify the bottlenecks and the challenges. But a couple of things that we hear very frequently, if not in almost every conversation we have with lenders, whether it's somebody in capital markets, secondary, credit risk, sales management, one of the biggest challenges is, in addition to finding those programs, originating them efficiently, meaning all the way through the supply chain. And we'll take a look at what that means to get some scope here, or some perspective rather, but also originating them profitably. Now, it's also hard to keep up with these programs and guidelines, and we're going to speak directly to that shortly. But in terms of losing business or meeting CRA goals, Joe, anything else you want to add to this that you've heard recently in your local events? You've been speaking to a lot of people recently.
Yeah, sure. One of the things that we hear quite a bit too, especially from sales management, is feel like maybe they're losing out on being able to recruit some people if they're not able to effectively offer these programs, and or possibly losing some people that they currently have, or just losing deals to lenders that are able to effectively administer these type of programs.
Yeah, and to drive that last point home a little bit, competing for builder business, for brokerage business, and being able to put competitive products on the table is something we hear often. So when we think about participating in these programs, let's just kind of break down some of the obstacles or some of the challenges or bottlenecks, because it may be a department, for example. We see that sometimes. But lack of standardization and centralization of all of this information is obviously pretty critical and problematic. There are so many different kinds of programs with so many different kinds of repayment terms. Borrower and property eligibility requirements differ from program to program, and even amongst the same set, or I'm sorry, the same programs from a single program provider. And a lot of that is impacted by funding source, for example. Are they coming from home, CDBG, Federal Home Loan Bank, Housing Finance Agency, and so forth? And then, of course, we know for you guys that the documentation requirements are can be problematic as well because they differ across programs, and we get that. So we have some things that we'll talk about later that help kind of wrap all that divergent and dynamic information into a centralized source, and then working on standardization is kind of a separate project, but we want to speak to what the potential benefits of doing so could be. But we also want to keep in perspective what your role might be and what your needs might be within those roles. So Joe hinted at some of the issues that the sales force might face, being able to go out to the market with competitive products and programs, being able to compete for business from referral partners, builders, and so forth. But what about lock desk uh, disclosures? What about the operations, processing, credit risk, underwriting? And then, of course, there are separate issues with funding and post closing and secondary marketing after closing, right? So we understand that these programs have a big and significant impact across your entire work stream, if you will, the entire flow of a DPA through your various divisions, beginning from finding out about a program to reviewing and approving to marketing to closing to selling or service releasing a loan. So we want to speak to as many of those as we can, but also make the point that we understand the holistic view here. But there are programs everywhere. So those of you who answered that finding programs is the biggest challenge, or understanding what's out there is the biggest challenge facing you, that's in large part what we are founded and based on, is tracking and monitoring and keeping up with the guidelines, the contact information, the program criteria, the repayment terms, the income and sales price limits, first time homebuyer requirements, homebuyer education requirements, and more that you'll see about all of these programs, whether they come from a state housing finance agency, a local HFA, a city, a county, a community development department, a nonprofit, and so forth, employers, land trusts, and more. Our job, our primary role here is to collect and curate and produce back to you current up-to-date information about all of those programs anywhere in your footprint so that you can start to get a feel for what's out there. You can strategize around your product and credit risk policies, and you can start to uncover layering opportunities, DPA alternatives, MCC add-ons, mortgage credit certificate add-ons, and so forth, and uncover all of those underlying opportunities that exist, but for lack of centralization. So we're trying to solve that problem most directly and most immediately, is centralize all that information, which we've been doing for about 10 years now, and make all of that available to you as lenders. So at least that very first initial stopgap or bottleneck can be addressed with a tool and a platform that can just get that information right in front of you. So you don't have to send your loan officers out looking for information or collecting information about these programs. Because what are they not doing when they're chasing down DPA documentation? They're not originating. They're not marketing to renters and prospective borrowers. And that's what they need to be doing, right? So what's in down payment resource? Well, there are 2,500 some programs. What are they? Almost all of them, 70% of them, are down payment or closing cost assistance. Now, we all know, especially those of you that are originating these programs, or you're in product or cap markets or secondary, you know that there are silent seconds, soft seconds, hard seconds. There's still some NSP money around. Some of them are combos. You got to use the agencies first to use the DPA. Some are standalone grants, but we batch all those together in one category, just sort of big picture, to say 70% of those programs that are out there are down payment or closing cost help. That's at closing assistance, whether it's a grant or a loan lien. And that helps the borrower cover down payment, closing costs, and so forth at closing. However, we also track all of the mortgage credit certificates. Most of them come from state HFAs, but there are some markets where local housing finance authorities are offering mortgage credit certificates as well. So we track all of those. We also track all of the affordable first mortgage loans that come from typically state housing finance agencies, but those are the low MI or no MI, maybe below market rate, the various first mortgage products coupled with DPAs that come from those kinds of agencies. And a little more than 10% of the rest of the database are things like matched savings programs or employer assisted housing programs. We track those as well. So that's big picture what's in down payment resource. And of course, these programs differ everywhere. What's in your home market may look different from what's in a neighboring market. Likewise for states or regions. Now, one last thing I want to cover before Joe takes over here and talks about kind of strategy going forward. Let's talk about homebuyer perceptions. We commissioned a report along with Freddie Mac through the Urban Institute, and it comes out annually. One of the things it looks at is the sort of misperceptions that exist among prospective buyers. So this actually comes from National Association of Realtors data and the Urban Institute. But the question here among prospective buyers is what percentage do they think they need in terms of a down payment to purchase a home? And it's astounding how many people think they need more than 20%. But if you look at kind of the bigger picture here, way more than half of all prospective buyers, and really almost 2/3 of them or 3/4 of them, think they need more than 15 or 20 or even 10 or 5% down. And we know that's just patently false. But where does that misperception come from? Is it that they think you have to avoid MI in order to buy a home? And obviously that's not the case. So we have to figure out, how do we address these buyer misperceptions and put in front of them solutions to the obstacle that they face. The primary, most daunting obstacle they face is the down payment. But if we look at the misperceptions they have about that down payment, it's coming from somewhere, and it needs to be resolved by those that are going to put the loan options in front of them. And that's what we aim to help you do. Now, the converse of that is, how many of those customers are familiar with low down payment programs? Now, that doesn't necessarily mean down payment assistance, but you can imagine if they're not familiar with low down payment programs, they're even less familiar with down payment assistance programs, right? So why is it that 3/4 of all prospective buyers are unfamiliar with or not too familiar with any of these programs? They're not being told, they're not being exposed to these options. And look, not everybody qualifies or needs one. And we understand that there are some concerns sometimes about doing DPA business. But how big is the pipeline of people that aren't seriously considering home ownership, but are otherwise income and credit qualified to do so because they simply misunderstand the down payment and they don't know that there are solutions out there? So another part of that Urban Institute study speaks directly to that question. We pulled credit data and looked at, and actually HMDA data as well, and looked at how many millennial renters, so renters who were under the age of 40, were income and credit qualified to purchase a median priced home in the market where they currently live. Now, a caveat to that is most first time home buyers are not buying a median priced home, right? They're going to buy their first home at somewhere below the median price. Nonetheless, the numbers here are still astounding. We looked at this across 30 or so major metros, and 21 million more renters under 40 were mortgage ready. So that's, and 88% of them could afford a median price home. So 18 million mortgage ready renters can afford a median priced home in the market where they live. That is a huge stagnant pipeline that needs to be tapped into. But we also need to understand the misperceptions they have and the lack of solutions they're being presented with. So here's an example of how this played out when we ran closed loan data, HMDA data from 2017 through our down payment resource database. And those 31 largest markets we looked at, more than 750,000 or 36% of all closed loans were eligible for a down payment assistance program when they closed. Now, that doesn't mean everybody that needs a DPA or everybody that closed needed one or even should have used one or would have. Well, we'll just leave it at that. But another important point here is that not everyone who qualifies for a DPA qualifies for just one. Typically, if they're eligible for one program, they're eligible for several. And the average across those markets was 6 programs and $9,200. And these were markets of all types, high cost, median cost, low cost, and so forth. And to look at just one major metro where we ran the numbers on the study, just in greater Chicago, the greater Chicago metropolitan area, 1.4 million mortgage ready renters under 40 can also right now afford a median priced home. That's just greater Chicago. That is a huge stagnant pipeline. And when we run the 2017 HMDA data through our system, more than a third of the people that had closed on a loan in 2017 were eligible for an average of 8 programs and over $7,000 in down payment assistance. That can go to great lengths to reduce LTV, reduce DTI, qualify at lower interest rates, lower mortgage insurance rates, and so forth. So, just one last kind of big picture look at what the opportunity looks like in some major metros around the country. Try to pull a good sampling here of several markets. Austin, Texas, income limits are through the roof, and these are for active available DPAs that exist today. Purchase price limits over 400,000. In Atlanta, roughly the same. And if you go down the list here, the purchase price limits are certainly amenable to a median priced or lower home, a first time home buyer house. The income limits are sufficient to get a lot of people qualified. And big picture, there's a lot of opportunity out there with down payment assistance programs that have flexible, market adjusted income and purchase price limits to tap into that stagnant pipeline of people that are ready, they're capable, they're qualified, they just don't know what the down payment requirements are, and they don't know that there's help out there to achieve them. Now, with that, I'm going to defer to Joe here, and Tracy, if you want to launch a poll, Joe, let's start talking about how we can fit down payment down payment assistance programs into everyone's business strategy.
Thanks, Sean. While we're getting ready to launch this poll, it's up on the screen now. I just want to jump back, and Sean, you don't have to worry about going back to any slides or anything, but the whole thing about borrowers' perception, we know that perception is reality. So for these borrowers, essentially their thought process is, their reality, their world is that they cannot buy a home until they have 20% or more to put down. And then the other thing is, only 23% of them have ever even really heard of a down payment assistance program. And when we talk about mortgage ready borrowers, that 21 million or the 1.4 million in Chicago, those are people that, have the credit and the income in order to afford a home. And what's stopping them? In most cases, it's that no knowledge of down payment assistance programs and the perception that they have to have 20% down. And with rising prices as far as rents go, it's going to be tougher and tougher for a person to get to that 20%. So I think that that's one of the huge opportunities out there for us to educate the borrowers. Anyway, so let's go ahead. How on the poll? How do DPAs fit into your business strategy today? I can't see, Sean. Do we have a critical mass of people already answering that question?
Go ahead and click, guys. We got about 2/3 of you answered. So tell us, of the few options on here, how do DPAs currently fit into your strategy? Is it mission critical? Have you identified it as a growth opportunity? Is this really just in service of referral partners? Or are you curious and exploring this as a strategic initiative? We'll give you guys a couple more seconds to vote here. All right. So Tracy, it looks like, there we go. Yeah.
Okay. So a lot of you see this as a growth opportunity. Some of you see it as mission critical, and about the same number look at it as just a service and or don't really have a strategy, but you're curious. Okay. Go ahead and roll it up, Sean, to the next slide. Decline loan analysis. This is a service that we offer to some of our customers, or actually any of our customers that would want it. And it gives us a lot of insight, not only to the individual customer, but as we aggregate those results, it allows us to see how the entire or the entire country works, how the mortgage industry itself works. So the decline loan analysis, basically what we're looking at here is that you have an average loans amount is 236,000. The number of programs that what we do is we basically, let me back up, I'm sorry. We take and we bounce decline loans that we get from a customer against our database. And we show that, how many of those would be eligible for some sort of down payment assistance. And as you can read in the top line there, more than half of those programs, or more than half those loans would have been eligible. We have an average loan amount of $236,000. Those are decline loans. The average number of programs that those loans would have been eligible for would have been 8. And the down payment benefit would have been $12,000. Now, when we talk a little bit more here, just a couple of minutes about pull through and those type of things, you'll start to see that 66% is what our number shows could have possibly been saved by $12,000 worth of down payment assistance. If you want to roll on up to the next slide, Sean. A pull through analysis. Basically, this just looks at the national average. We can set this up to where we can do one for each individual company, but essentially here you're looking at a company that originates about $250 million worth of business. You can say it's a month or a year, however you want to look at it as far as the size of your organization is. You can kind of judge the size of your organization to this, but 12,000 units is about $250 million worth of business. On average, pull through is 76%. That's a national average as listed by the Mortgage Bankers Association. So 76% of all loans that are applied close. So that means that 24% of them do not. So the number of loans that fall out of that 12,000 is 2,880. An average loan application right now, fourth quarter, it was actually a little higher than this. It was about $87,000 or $8,700. So your average cost to perfect a loan, that's the amount of money that your organization puts out to get that loan to a decision, whether that decision is that, yes, it goes on to close or it's a decline loan. So that's $8,700. We've just put 85 in here for easy math. Kind of curious, the average cost of labor for a car 2018 was just a little bit over $7,000 here in the United States. So in other words, it costs more to perfect a loan than it does to build a car in labor costs. So if you look at that total amount of non-closed loan applications, the 2,800 loans by the $8,500, you're looking at almost $24.5 million worth of cost associated with loans that basically, used to sit in a declined loan pile. Now they sit on a disk somewhere or in the ether somewhere, just essentially doing nothing. That's $24.5 million worth. Like I told you, 66% of loans in the declined loan analysis could have or were declined because of insufficient funds to close, a DTI issue, or lack of down payment. So 66% of those total loans that were declined may have been saved if there were some additional funds available. So that would have been a 1,901 loans out of this particular $250 million worth of production. So as a loan officer, let's just say you can only save 10% of those. If you save 10% of those loans, and I think that that's a very realistic number, in fact, a very low number, because we're talking about people that have actually gone through the application process, have gone all the way through the process, ultimately to be declined. If you could have offered them that $1,200 that we talked about a moment ago, that was the average down payment benefit in our decline loan analysis, and that would have brought down their DTI or given them enough money for down payment or covered their closing costs. I think that to say that 10% is a very reasonable number. That would have been $1.6 million you would have saved the organization. And more importantly, for you loan officers on the phone, you would have closed another 190 loans if you only closed 10%. And the last time I checked, loan officers' compensation is tied real close to actually being able to close a loan. So, these numbers just kind of staggered me when I first started seeing them, to realize that there was $24.5 million worth of cost being spent that wasn't turning into anything. and the number of loans that could have been saved and the number of loans that a loan officer could have ultimately closed, it blew my mind. If you want to go ahead and roll up to the next slide, Sean. There's some opportunity costs associated with this too, and we've already talked about some of this, but there's the millions of dollars worth of operations and processing fees we talked about. But then that didn't even include the amount of money you could have made on that loan, either through servicing or SRP. I mean, just the numbers start to become staggering. So when I hear people talk about, well, that it's just not as profitable for us to do those loans, I don't know that this side of the equation's been counted in on that, because if you're denying a loan and it's doing nothing but costing you money, and then you can do one of these type of programs with it and actually turn it into a profitable loan, I just don't think people count that in when they look at the overall big picture. And then the other thing here is loss of referrals, from either the new time home buyer or the lender partner. I mean, the referral partners, such as your builders or your realtors. Think of how much more clout you have as a loan officer if you can go in and say, hey, I helped you save that loan. Can you give me another couple of your really good deals? I mean, let's start a good partnership here, and I want to be your lender of choice. And then we talked a little bit earlier about the loan officer recruiting factor, and the fact that a lot of loan officers, when they look to go somewhere else, they want to know that they can offer a wide variety of products that are going to allow them to close the maximum number of deals. And if you are at a place that is not involved in these type of programs, is that one of the things that may make you think as a loan officer that maybe it's time for me to make a move? And if I do make a move, I want to go somewhere that has a much wider variety of products that I can offer. We work with both realtors and with loan officers, and y'all kind of saw that earlier in the poll too. This particular webinar was geared towards the lending side of it, but we have specific products and services we offer to just lender partners. And this quote is an actual quote that we've gotten from a particular realtor partner, and then very similar type of sentiments given to us from many is, I cannot find a lender who will help me navigate down payment assistance for my clients. So they're looking for you. Realtor partners are out there looking for a loan officer or an organization that knows how to do these products and knows how to do them well. And then they will bring them not only that business, but more of their business as a reward for helping them navigate those deals that aren't necessarily the easiest. So to that, we have 3 products that help in this particular solution or strategy session of the webinar today. The down payment directory, which we're going to show you here in just a few minutes. We're going to show you a live demo of the down payment directory. The directory is sort of the reference section in the library. It has every down payment assistance program, that 2,500 number you've heard thrown around. It has every one of those in there. Each one of those programs is updated on a monthly basis. Sean didn't, he's a little modest sometimes. He didn't go into quite a lot of detail about what that entails, but we work with over 1,300, Sean's group does, 1,300 providers of programs. We contact each one of those providers on a monthly basis. And in 2018, Sean's group did over 90,000 updates to the database. So for you folks that are in sales management or are on the corporate side that are on the phone today, it's almost impossible for an individual or even a group of 2 or 3 individuals to keep up with programs, especially if you're involved in programs in multiple states. The other thing too is this particular the directory has all of those different providers that Sean talked about earlier, whether it be state, federal, local, nonprofit, employee assistance, those type of things. So some of those programs too allow you to maybe offer a program that doesn't have some of the income restrictions on it that you may think about whenever you think about down payment assistance programs that come from some of the organizations you're currently working with. So this may be an opportunity for you to find additional programs that you can layer with those programs, or that may stand on their own, and allow you to do some programs more profitably. We're going to talk, I'll tell you a little bit about the loan officer portal and the consumer portal. We're not going to go into those today as far as doing a demo, but the MLO portal has been sort of described as match.com for down payment assistance programs, because it allows a loan officer, while he's talking with the consumer, to put in basic, and I do mean basic information, like you have consumers, we showed the Chicagoland area. So you have a consumer comes in and says, I'm looking to move into the Downers Grove area, which is an area up in Chicago. So the loan officer puts in Downers Grove, it's going to click and say, your institution, and this is an important distinction, this is not looking against all 2,500 programs, it's only looking at those programs that your institution offers. So your institution offers 6 programs in Downers Grove. And then you put in additional information, like here's the amount of house that they're trying to buy in Downers Grove. So it's $485,000. Well, that might exceed the max loan amount on a couple of those programs. So it would drop to 4. Well, you find out that they're a veteran. So you click they're a veteran. Well, that adds 2 programs back in. So now instead of being at 4, it's at 6. You get the idea. There's just a minimal amount of information you can put in, and it helps match that borrower with the programs that your organization offers. And then as a mortgage loan officer, you can get details about those programs, and you'll get the same level of detail that you'll see here in a moment when we do a quick review of the directory. And then the consumer portal, it's if the MLO portal is a pull-through product, the consumer portal is a lead generation tool. Essentially, you would put it out there in your email signature. You could have it on your website as a loan officer. As an organization, you could put it on the main website of the organization. And as a consumer clicks on that, then they put in the same exact type information, and the interactiveness of it is exactly like it is with the MLO portal. It will only show them those products that the organization is able to offer. And then as they put in information that either allows them to take advantage of additional programs, or it may exclude them from a program because of meeting or exceeding a limit, it's then going to just kind of keep that count up in the corner. They can click on it, and basically when they click on it, it says, do you want addition? It'll say you're eligible for up to 4 programs for up to $10,000. Would you like additional information? They click yes. They put in their email address and name and phone number, and they hit enter, and then they're going to get an email back listing out those programs that they're eligible for. The loan officer is going to get an email also saying, hey, Joe Whitaker was just on your site. He's eligible for these 4 programs for up to this $10,000. And the loan officer can actually click on those programs and get the detailed information about those programs. So that's a quick review of what we have. Here's a little of what I've already talked about. So there's really no reason to go through that again, except for just realize there is an order of magnitude to this. I mean, 90,000 updates done in 2018. I think that's just incredible. Every time I see that number, I just shake my head. So we're going to jump into a quick demo of the directory now. I'm going to have to talk for a few seconds while Sean gets that loaded up on the screen, which, me being in sales, that's no problem. And Sean being quick with his computer fingers makes it really no problem because he's already got it pulled up. This is the directory. We can key off of many different attributes within the different down payment assistance programs, but we can go geographically. We can first look by state. If you want to just pull it up by state, let's see what state Sean's going to go to.
Oh, let's see. Let's try California. How about that?
Okay, California. A lot of programs in California. As you can see, if you didn't notice it a moment ago, it said displaying one of 100 of 362 programs. California has 362 programs in it. Before we put in California, it said 2,400 and something programs that are out there in the entire database. So we can say 362 programs. That's an awful, as if you're this particular product is designed for like your capital markets folks, your product development team, your CRA manager. They're going to look at that and they're going to say 362 programs. That's way too many for me to be looking at one time. I won't be able to make heads or tails out of it. So maybe they want to pull down the geographic area even further, so they can go to Los Angeles. They can go to Los Angeles County. When they do that and update the filters, it goes from 362 programs down to 86. Now it's becoming a little more manageable. As you can see, as Sean's scrolling down there, it tells you the name of the program, it gives you the type, the max purchase price, the down payment assistance that's available with that particular program, and then whether or not that this particular organization participates in that program. So he just approved a program there. That's why I was telling you earlier that whenever you're in the loan officer portal or the consumer portal, it only shows those programs that are approved. So just as easily as Sean just did that, as the secondary marketing person or the products person, he approved a program, and then he ultimately unapproved the program. So, say that they're all of a sudden they're going to start offering that program, boom, you can do that. So you can also click on any one of the blue links that Sean is scrolling over there, and you can get a detailed description of the program itself. As you can see here up at the top, we have a highlighted message basically telling you that effective March 1st, that 2% of the zip and eliminating the 4% zip. So, it's going to give you any information, any updates, anything that we think you need to see right off the bat is going to be right there at the top. It gives you the blue links here are all links to the provider's website. So you can go straight to the provider's website. And then we're going to give you as much information as we possibly are allowed in that provider's contact information. We have the max eligibility as far as the sale price goes. And then you get into like geographic coverage and then eligible borrower's eligibility and whether or not there's education required, what the incomes are, credit score requirements, any limitations to the program. And then you're going to get down here into the loan terms. What are the repayment of the loan, interest rates, approved first home products that you can go with it, so you can start try to figure out what type of layering you may be able to do. All that information is available to you out there when you click on any one of the programs that you have that type of capability with any of them. And again, just you have all these different filters. Like if you only wanted to see just the grants, you could do that. If you want to go to a different state, you can do that. Second mortgages and grants, click on it. It's going to go from 112 programs down to 56. If you wanted to do something, show only the ones that are active. We have 3 statuses out there. We have active with a wait list, or temporarily out of funds. We don't remove a program from the system simply because it's out of funds. If there is a reason to believe that they will be funded again. Now, once we've told that, hey, we're out of funds and we're not going to be refunding that program, then we will remove it from our system. But there's just a ton of information out there on all the different programs, and that's the same level of information you just saw would be the level the loan officer could get to through the loan officer portal once they clicked on it. Once they ran some of the borrower's information in and said that this was one of the particular Boulder County down payment assistance program is eligible. It's a $15,000 maximum benefit. So here are the next steps. And as you can see here on the program provider's information, we've actually got a person's email address in there for you and their phone number. So we get as detailed information as we possibly can on those. Sean, is there anything else you want to add about the directory?
No, I think we've covered the basics.
So that is the directory. That's one of the products, one of the 3 products that we have for the lender side. And if you want to go ahead and move on down through, you've heard Sean and I talk an awful lot I'm going to take a breather right now, rest my voice for a second, give you guys a chance to read this, because this is what one of our customers says about us. Okay, I've read through that, and I'm from Kentucky, so if I can sound out all the large words, I figure everybody else has had an opportunity to read through that also. So, you know, Fifth Third is one of our customers. We've worked with them for quite some time, and they just, as you can see, have an awful lot of nice things to say about our program, and that's the type of things that we hear from customers as we bring them on. The fact that it does, take what used to be a manual, labor-intensive process and make it much easier for them. If you want to learn more, there's a lot of different things we're going to be sending you today just for being on this particular program. That barrier to the home ownership report, that's the Urban Institute. We'll be sending you a copy of that. It's a link to that particular product. They have a really cool interactive map in there that can show you, I think it's up to 14 different attributes of the mortgage market and the mortgage industry. And like you can click on any state, and then in the drop down box, you can change to 14 different attributes, and it'll show you exactly what's going on in that state. We do a down payment report, and we'll send you the latest copy of that, a recording of this webinar, and some information about the directory that you just saw. We got a little 2-minute video in case you either want to refresh yourself or show that to somebody else within your organization. So for like you loan officers that I saw that were signed up, this is more of an enterprise type solution. So you may need to get this into the hands of somebody either in your CRA group or your secondary group or product development team for them to get with us and work on getting that particular product set up, the directory product. So if you want to go ahead and, so here's sort of the sales pitch side of this. For one thing, I will be at the Secondary Marketing Conference coming up next week. So will Rob Crane, the owner and president of the company. So we can meet there. If you have some folks going and you want to try to set up a meeting, just reach out to me. And then we can set up a demo for the enterprise solution, like I was just saying. As being part of the webinar today, we will waive our setup fee. We traditionally charge a setup fee, and that's the standard setup. If you want to do some wild integration work or customized work, we can determine what that would cost. But our standard setup fee, which is traditionally $750, we'll waive that since you were on this webinar today. And then for June Home Ownership Month, we're going to run a special on the directory product, and we got approval to go ahead and start offering that special early for anybody that was on this webinar that would be interested in talking to us about the enterprise solution. So love to hear from you guys if you're interested. If you want to talk more, you're going to get a lot of information from that information that we talked about on the previous slide that we're going to be sending you. So I hope today's been well worth your time. And even if you're not in a situation or a position to take advantage of some of these products that we have or some of the solutions that we're offering, I know you'll get some good information out of the stuff that we're going to provide you at no cost. I think the last slide just has a picture of me on it. So let's hurry up and get to that. Gosh, look at that handsome guy. There's my contact information. Feel free to email me. Feel free to jot down the phone number and give me a call. The lender resource page is on there also. That's downpaymentresource.com/lenders with an S. Make sure you have the S on there. And there's our Twitter handle also. I really want to thank you guys for your time today. I see most of you hung on through the very bitter end there. So Sean, I didn't run off everybody. Now some of them may be asleep, but I didn't run them off. Tracy, did we get any questions that we need to answer?